It's a relatively positive start for the Asian markets, continuing from where Wall Street left off last evening.
If I were in the room, I would say let's move ahead with a 25 basis point cut in September.
24,522 is the low that we saw, and I think as long as the market stays above it, I think hope that the market continues to see some repair and recovery. It's a pretty good start, all told, this morning.
I would agree that we're still in the slow burn phase of this market.
We're not affected or impacted positively or negatively by the GST.
The dollar's weakened considerably in the last 24 hours, as it has been doing all of this year.
Nifty, yes, it is off the highs, but IT is the one which is keeping it in the green today.
It's unlikely the company will exhaust all the cash balances for the buyback.
It's been a couple of dozen times that gold has made all-time highs. Today, yet again, we've seen $36.50 an ounce being taken up on the higher side.
For the markets closer to the day's high, we started on a choppy note, but then we saw recovery. Nifty now above that level of 24,850.
Well, that is the day so far, and it has actually been a pretty decent session all told. Market, of course, up 100 plus points, almost at about 24,900. This is Closing Bell. We are coming to you live from the CNBC-TV18 Muthoot studios. I'm Prashant Surbi, and Rima with me here in the studios. Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, good afternoon, folks. And we have IT to thank, Rima, isn't it?
Yeah.
I mean, Infosys has inspired so much confidence.
You all were blaming the tech sector. I think in the last 10 trading sessions, in 9 of them, it was a drag.
Yeah.
Today, it's like covering up.
Then IT
ground.
stocks came and said, hey, guys, don't forget, show me the money. I have the money. So that's what we're getting from Infosys.
No,
indeed, and we've got the weekly expiry that plays out as well. So, 100-point gain is what we're holding on to. If we can get to 130, 140, there's a weekly expiry factor that could play out as well. So let's see whether or not we can conquer the higher levels or in fact, the bears want to fight back. Interesting 60 minutes coming up, though otherwise it's been a bit of a dull day, I think so. Not too bad after a while.
Shooting stars, Nigel, right here and there. Some 3, 4, 5 stocks up 10% out of the blue. Kind of hard to explain what's happening individually, but we will try to. We will try and look at some of these movers over the next 60 minutes or so. 24,500 roughly is the level. 24,980 or so is that level, which the market needs to get above for more upsides from here. So till then, I think people will still lament that maybe this is still ranged and contracting, etc. Nifty Bank, the last I saw, there isn't very much enthusiasm at all. Actually, if it's barely managing with a 60-point bump, it's barely managing to keep its head above water. It's absolutely flattish at this point in time. As Surbi said, as Rima said, IT, of course, 2.6% gain. And I think bulk of the Nifty weightage, what's moving the Nifty, that table comes up, it should be largely predominantly IT services. And by the way, it's not as if, all stocks are up in a big way, but Infy is up, of course, 5. TCS is pulling its weight. Tech Mahindra, Wipro are up in the region of about 2.5% as well. So that's the picture as things stand right now. Lots coming up here in the next 60 minutes. So IT stocks, of course, is the top story, and Rima will talk more about that in just a bit from now. So that's helping the market keep above 24,800, closer to 24,900 now. PSU banks, Bank Nifty, etc. under pressure. Real estate counters also. So that is what is coming up in a bit. So Infy will sort of dissect in some detail as we come through. Life insurers are in the spotlight. So general insurance numbers came through. We put it out yesterday. Yash will talk about life insurance and individual companies where some companies have showed weaker numbers. Some have been stronger. IOL Chemicals, big 30% move in September. 6-7 trading sessions. What's happening there? And Ekta perhaps joins us in a bit to take us through that.
Okay, how should you position yourself in the last hour of trade? We've got Mitesh Thakkar from Bonanza Portfolio joining in with a few closing strategies. Mitesh, afternoon. We've been quietly creeping up today's trading session. Now 100 points up on the Nifty. Last 1 hour to go. What would the trade be? And throw in your thoughts on Nifty IT, since that's been the leader.
Okay. In fact, I was going to mention the Nifty IT because I think that's where a lot of stocks are giving a reversal. A lot of IT stocks are giving a reversal. But just on the index first, the Nifty IT made a low of around 34,200, 250, which was way back in the first week of August. And then we kind of got the same level yesterday. So it looks like an early double bottom kind of formation. We'll get a confirmation at slightly higher levels. But the indicator setup and the overall price chart does look positively biased unless until we break 34,250. Good chance that the Nifty IT could head towards 36,500, which gives it another 1,400 odd points on the upside. But with that, I have a buy on Infosys. Buy here with a stop just below 1480, targets of 1535. And the other one is Titagar Wagons. I think Titagar, that's given a breakout above a declining resistance line. So buy here with a stop at 860 and look for a target of 920.
Okay, all right. Thanks a lot for that, Mitesh. Both those two doing quite well. Infosys, that's really the big one for today. Titagar's Rail Systems as well, looking up. Dharmesh Kant, Head Research, Chola Securities, joins us on the show. Hi, Dharmesh. Good to see you, Ben. Well, I think, Dharmesh, the last time we had spoken about a few of these auto names, and I think you hit the nail on the head. Hero MotoCorp, if I'm not mistaken, is what you liked, and Mahindra and Mahindra. Now, the auto index itself has done quite well, and the street is very optimistic. Second half of the year, we're going to see good amount of sales. Things will look up. Do you still like some of these names, and what would your top two picks be in the auto space?
Yeah, good afternoon, Nigel. Thank you so much for remembering the picks out there. I think most of the upside run-up has been done in both Hero MotoCorp and Mahindra. A couple of percentage points may still be there. But at the same time, downside seems to be pretty protected till the October numbers are being rolled out. So till, say, first week of November, you are in a safe territory if you are holding these companies, and we continue to recommend our clients to hold the same. We are looking at auto ancillaries now in a more meaningful way, and there are a few names which are standing out. Jamna Auto was one which we have flagged earlier on your show as well. There, I think more traction is likely to be there going forward. Along with that, some of other auto ancillary names like Motherson, Sony Wiring, which are purely domestic focused kind of a company. Uno Minda stands out again there. So the only caveat out is the valuations are still not reasonable. They are extending towards +1 standard deviation of their historical averages of 10 years. Having that in mind, but we think that this hope trade which is piling up, and hopefully our dealer checks does suggest that October month would be good. So this momentum is likely to carry out there, and thereafter we'll take a call. So these are the few names which we are focusing on as of now.
Okay, let's talk about IT, and just a quick word on Infosys and the big news here. Infosys board will be meeting on 11th of September where they will consider a buyback. This would make it the company's 5th buyback since its listing in 1993. The question is, how much will the company buy back? According to a lot of estimates, like Morgan Stanley's put out, the company is likely to buy back between 10 to 14,000 crore rupees. So, some of the other analysts I spoke to also have their estimates between about 12 to 13,000. They're unlikely to go all the way up to 25% of the net worth, because that would erode the entire cash that the company has, which is nearly 25,000 crore rupees. Now, generally, a buyback is positive because it signals confidence, in the minds of the company, the promoters, about the share value. But here, just remember that from now on, it will always be a tender buyback. Open market buyback is no longer permissible. And even on buyback, there has been a lot of changes on the taxation front. So you should get a hold on, before, just to understand the kind of tax you will pay on the amount that you receive from the buyback. The last 3 buybacks have happened were open market buybacks at a price of close to about 9,500 crore rupees. And both TCS and Wipro are eligible for a buyback.
Yeah, absolutely. I mean, that taxation change is important, right? Because it was felt that there is an arbitrage between the way dividends are being taxed and buybacks were seen as a more tax-efficient route, which is why a lot of companies moved from giving out dividends to buybacks. But that also got plugged in the budget last year, because now even dividends, they are even buybacks. The income from a buyback is treated the same as income from dividend. It's just the cost of acquisition of shares. That can be set off as a capital loss. Yeah. So therefore,
maybe in some time we'll just put out the math behind it, right, and explain to our viewers how the buyback has changed. So in just some time we'll try and get the math up.
We'll do that. In the meantime, let's go back. Okay. Let's actually, in the meantime, let's ask Dharmesh. The buyback aside, today it's working so well for Infosys, 5% up. Dharmesh, I don't know, is this a bit of a no-brainer that for what it's worth, you look at a buyback? Rima saying in all likelihood it's going to be a tender buyback now. That's the way it works. What would you advise, people? Is this the time to buy Infosys just to play on this tactical move?
Yeah, good afternoon, Survey. No, I don't think it's a time to play a fresh buy into the stock. If you're invested, then you have an option to take a call. What it does provide a hope and to negotiate next couple of quarters to see if things are turning around on the business front. And I think Rima did a show in the morning where she was suggesting that around 5.5 lakh or 5,90,000 odd crores of buyback was done in the last 5 years. If you put that in context to what the acquisitions these companies have done, around 30,000 odd crores, all top 4 or 5 companies put together. So even inorganic route opportunities not available with them. At the same time, if you look at the dividend payout of all these companies, anywhere between 50 to 90% is kind of a dividend payout is rolling by. And on the business front, hardly any movement, mid-single digit kind of traction is there. So it's fatigue, saturation, everything is setting in. At the same time, the light at the end of the tunnel is not visible as of now. So in the meantime, it does provide a floor, but I don't think things are going to turn around fast for these large cap companies, at least for 2-3 quarters down the line. So if you are hopeful and your study suggests that after that things are going to turn around and you want to play the wait and watch game, then it's fine. Otherwise, to our mind, it's more of an exit and take your profits and be out of the table on the large cap IT stocks.
You know what Dharmesh was referring to? So Morgan Stanley said that from 2017 to up until now, what has been the total amount the large 5 IT companies have paid out via dividends and via buybacks? And the number stands at, wait, let me just get that up. As he said, close to about $70 billion. And in lakh crore, it's 5.9 lakh crore rupees. So nearly 6 lakh crore rupees has been paid out in the last 8 years from 2017 up until now. And that is close to about $70 billion. Just to, because we've been making so many arguments. I mean, there's been a lot of criticism on whether Indian IT companies should have deployed that money into deep tech, some sort of a startup, instead of repaying shareholders, rewarding shareholders. And plus the $70 billion is assuming today's dollar rate of 88. In 2017, 2018, when they were making those payouts to the shareholder, the dollar value was a lot lesser. So I guess if you just, account for that, maybe the number would have been closer to about a lot higher than what we're talking about. So 5.9 lakh crore rupees.
But that's what we asked Sandeep in the mornings of, Sovilio, that whether this money could have been better used. But that's the point that he was making, that AI valuations have also gone through the roof in such a way that even if you take all the cash that all the IT companies in India put out, which is just under 6 lakh crores, there's nothing you can buy in the market. I mean, at today, maybe 10 years back, if you'd started, maybe some good, AI startup, but just the way things completely turned around post-COVID, the NVIDIA story. So, well, we wait in hope. Till then, there are the buybacks.
In the US, for example, right, buybacks, I think there's been lots of analysis done to explain what percentage of US's outstanding performance is explained by, things like EPS growth, P multiple expansion, and how much is explained by buybacks. I mean, essentially, what is a buyback, right? You're reducing the outstanding quantity of shares in the market. So the profits distributable go to that much lesser number of holders. I mean,
lesser number of outstanding shares.
So a lot, I don't have the number, but I think it's a very large figure in the US. Almost 70%, I think, from 60-70% is explained by buybacks in the US. But of course, they've been doing other stuff as well in terms of investing in technologies, etc. So it's a debate which we will keep having. Let's also talk about the other story, right? I think this is coming in from our sister network, CNBC Awaaz. Yatin is exclusive. Yatin tells us there's a block coming in Kotak. Yatin, take it away.
Good afternoon, Prashant. Now, talking about Kotak Mahindra Bank, sources have indicated that brokerages have approached mutual funds and FIIs for a potential block deal in Kotak Mahindra Bank, and the shadow book building process has already started. We understand that Sumitomo Mitsui Banking Corporation, which recently has announced its intentions to buy a big stake in Yes Bank, is looking to sell its entire holding in Kotak Mahindra Bank. Currently, Sumitomo holds close to 1.65% stake in Kotak Mahindra Bank, which is valued at close to 6,500 crores. And they want to completely exit this particular investment so that they can fund the Yes Bank deal, which is already underway. So yes, this block deal is expected anytime soon. When we tried to contact Sumitomo Mitsui Group for this story and their comments, they have not yet responded. But yes, this 6,500 crores block deal can happen anytime, and brokerages have already initiated the process to execute this particular block deal in the market.
Yatin, thank you very much. That's an exclusive story, and we'll keep track of this. Dharmesh, any thoughts on Kotak? I think there was a note yesterday from, and we had, by the way, Suresh Ganpati. It was a note from Suresh, if I remember correctly, asking the question whether Kotak is it time to give Kotak a relook. I don't know if you have any thoughts here, Dharmesh.
Yeah, Prashant, I mean, good for Kotak if this deal goes through, because this quarter, when the other income would be reported, there would be a significant loss because of treasury, loss getting into play. And if the deal goes through before 30th of September, so some of it will be negotiated through the income coming on this deal sale. Other than that, I think, the businesses for all the private sector banks will be in a tough spot in Q2. One is because of the loan growth has not been there significantly. They all have been focusing more on the secured book across the board, be it public or private sector banks. So there the trouble is there. NIMs will definitely contract this time around as well. And Q3 is when they will be looking for some uplift in the sentiment. And on top of it, you are having this other income reversals coming into play. So net, we are expecting only 4-5% kind of growth trajectory as profitability is concerned. Same on the lines of Q1. But as far as the long-term trajectory is concerned, I think if you are looking at from a 1 year, 2 year kind of a perspective, so any decline out there because of such results when they are reported is an opportunity to buy and stay invested in a large cap, private sector place like Kotak, ICICI, and Axis Bank.
A bunch of quick ones, if you will. Any thoughts on Prime Focus's 30% move, Dharmesh?
Yeah, Prashant, it's a surprise move which has come through. If you look at Prime Focus for the last 4 quarters, the operating profit has been good with margins, into early 20s, 22, 23% kind of a margin. I think this move is more to do with, just a wild guess, maybe something to do with financial re-engineering or restructuring, because the debt which is sitting on the balance sheet is quite high. 750 crores of networks as opposed to that 850 crores of debt is there. If some fundraising is being done through equity route, where this debt can be hived off to some extent, it would add their profitability in a big way. The business otherwise is doing nice for them. Only the debt is the concern out there. So maybe this move is something to do with that. I'm not very sure on it. It's just a wild guess which I'm throwing now.
No, the other one is bunch of the, as I said, right, big moves. Precision Camshaft is another one. 18% is the number one volume-led gainer on the NSE right now. It should come up on your screen. 259 on it. There is Fluorochem, Gujarat Fluorochem, 9% move, and it's got huge volumes right now. Action Construction Equipment will come up on your screen. There you go. Ace Action Construction, 7%. Again, some 4th largest NSE volumes overall. Sula has been having a bit of a move. I'm not sure, from about 250 to 280 in 2 days. So 8% move on Sula. Prime Focus we already spoke about. And look at something like a Bluestone. Bluestone has got it's a recent listing. And 10%, I think about 10, 12 days old in the market. 12% move, $660. And that's, of course, in the organized jewelry space. It's a newer, not a newer player, but newer listing in that sense. Let's actually talk about precious metals, right? And take a segue there. Manisha is joining in with what's happening, what's driving this, record run as far as gold is concerned. Silver not very far behind. Manisha, take it away.
Well, thank you for that. Yes, we've seen gold prices scale up new record highs for a 3rd day in a row here. And every day has been a $20 to $50 of a move that we've seen happen in case of gold. With the kind of run-up that we have seen, gold is making all-time highs, not just in US dollar or Indian rupee, but various other world currencies as well. So when you look at the last 12 months, well, we've seen 45% a piece of gain, both in case of gold and silver. For the year 2025, gold is up 39%, while silver is up 43% as well. Well, the support continues to come in from the fact that the markets have totally priced in a 25 basis point of a rate cut from the US Fed meeting in the month of September itself. Well, there is even 10-15% of a probability of a 50 basis points, something that the markets definitely are discussing. And then you have seen all US data come in on the weaker side, whether it has been about jobs numbers, home, credit cards, even the debt situation that the Western world seems to be dealing with. The better smart money seems to be moving in case of precious metals there. So there's quite a bit of a buoyancy that we've seen happen in case of these PGM metals. The second point really is that the weak economic data is not just about US, it's also about China and much of European Union. The street also is now looking at weakness in US dollar index and expected weakness going forward as well. And if you look at the gold buying right now, the investment demand is quite strong in sense of physical. Gold actually, even as it's trading at record highs, it's trading at a premium in the physical markets in US and many parts of Asia as well. So every time you see a bit of a correction coming for gold, all the people who have been sitting on the sidelines thinking they lost the buzz immediately get in. Is the reason you aren't looking at a very sharp correction in case of gold, because a little correction and you start buyers come back into the market, and that's exactly the kind of scenario that we're looking at. Expectation is that going forward by the end of this year, you perhaps could be looking at $3,800, even $4,000 an ounce. It really is a guesswork into the markets right now, because the way we are running up in case of gold, these are uncharted territories, and the global banks and brokerages are just about revising their upward targets in case of gold right now.
Thanks a lot for that, Manisha. And we have our own advisor in the newsroom, who's Manisha, over the last many years, telling us gold is the asset to look at. So, Manisha, split down the middle between gold as well as the Bitcoin. I don't know whether I got enough of gold, but your advice has helped. Thanks a lot, Manisha, for joining in. Well, sticking with the theme then, earlier today we spoke to George Alexander Muthoot, the MD of Muthoot Finance. Let's listen in to what he had to tell us.
Overall, we see that the cost of funding is coming down. And as usual, that's our practice, the Muthoot Gold Loan Company, Muthoot Finance practice, that whenever the cost of funding comes down or cost comes down, we pass on the benefit to the customers. Net interest margin has been in the range of about 5.5 to 6. I think we should be able to maintain that between 5 and 6. We may be able to maintain that also. During the second quarter results, when we are announcing, we should certainly give a revised guidance, which definitely will be more positive and probably which will reflect on what is happening and what is going to happen in the next year. Certainly, it will be a better performance this quarter also, and we hope, and I'm sure we'll be able to continue what we were doing last year with regard to the guidance.
Well, gold's at a high, Muthoot's at a high, and doing very, very well. We'll take a quick commercial break. Dharmesh, thank you very much. Always good speaking with you. Good conversation. We're going to take a break, come back, and Atul Mehra will be with us from Motilal Oswal Asset Management on the other side. We pick up on some of these sectors, trends, and markets coming up. Welcome back. Markets, of course, at a headline level looking good, 100-plus points, but lots of shooting stars. And Hormuz is here to spot some of them and tell us the action behind them. Hormuz, take it away.
Shooting stars, some of them with low free float, some of them springing up in the last few minutes as well. We start off with the PSU name first. Is ITDC, the Indian Hotels and Tourism Development Corporation. The biggest single day gain and the highest volumes you're seeing on the stock since the February the 1st of 2024, which was the interim budget day. That too, on that day, the stock was up in a 20% circuit, as is today. And before this move today, in the last 12 sessions, the stock had gained only thrice. And today's session, we've already seen more than 25 lakh shares that have been traded for this 20% upper circuit. The 20-day average of this stock is only 10,000 shares. And courtesy of this one-day move, the stock has broken above all of its key moving averages, be it the 50, 100 or the 200-day moving average. Not just that, the stock has also turned positive on a year-to-date basis, continuing its trend of delivering positive annual returns since 2020. 2020. Of course, the returns are in single digits over the last couple of years, but positive nonetheless. And of course, talking of low free float, the government owns 87% stake in the company, so you need to keep that in mind as well. The other one, of course, is Sula Vineyards. The stock now 8% higher, the biggest single day gain you're seeing since January of 24. 5 out of the last 6 sessions, the stock has moved higher. Today, significantly high volumes, more than 1.1 crore shares have changed hands. Daily 20-day average of around 7.5 to 7.75 lakh shares, broken above its 50-day moving average, and the next level on the upside is 287, which is the 100-day moving average for the stock, yet remains an underperformer, down 31% so far YTD, and well below its IPO price of 357. Name that has sprung up in the last few minutes, Lakshmi Organic, has a second day of gains for the stock, 9% higher now here, and more than 60 lakh shares that have changed hands. 20-day average is 20 lakh shares, and over the last few days, the stock has continued to find support at its 200-day moving average of 206, and from there, it has reversed even in today's trading session, yet remains an underperformer, down 5% so far this year, and has negative returns every single year since its listing in 2021. And lastly on the list is Gujarat Fluorochem, and this 8.5% move, the biggest single day gain and the highest volume since September of last year. More than 14 lakh shares have traded today, and this is compared to a 20-day average of just 50,000 shares. The stock has moved above its 50 and 100-day moving average today. The 200 DMA on the upside comes up to levels of around 3762, and the stock yet again is an underperformer this year, down 12% so far, and also the returns in the last year was a gain of 12%. So the returns over the last 2 years have basically been zero for this stock. Gujarat Fluorochem 8.5% higher today.
Okay, Hormuz, thank you very much for that. That's a list of stuff which is moving around very aggressively. Someone pretty small free float, but volumes of course significant. Atul Mehra is with us, fund manager, Muthoot Asset Management. Atul, good to have you with us here. Thanks for joining in. In the large cap fund, Atul, it's all some 20-25% weight in financials, right? So that's the one space, clear way that you're very overweight. We were having this conversation with somebody earlier in the morning as well. Not sort of a huge underperformer or neglected space in that sense, but yeah, relatively, it is an underperformer. What's your sense, Atul? Is it a economy-wide? These are economy-facing large sectors. If the economy's got to turn, instead of picking this or that sector, it should show up in these in financials in a significant way. But having an exposure to your HDFCs and ICICIs, you think that's the right way, or maybe more focused, like a housing finance or specific areas where you think there's perhaps more delta?
Yeah, hi, Prashant. So in terms of financials, I would say that if you look at it from the perspective of last 12 to 18 months time, the larger cap financials have actually outperformed. Like many of the HDFCs, ICICIs, like they've had a 15-20% outperformance over the benchmarks. So what we are seeing within financials as of now is what the larger banks and so on, they are kind of insulated from the current in terms of asset quality issues that you're seeing, which are more pertinent to the smaller names within the financial services space. So that is something that is very peculiar at this point in time. So hence we believe that even at the current in terms of valuations, in terms of a lot of these names are very reasonably priced. And I think like we've discussed in the past, a lot of financial names are highly correlated to foreign flows. So like we've seen in the last few months, FIIs have again turned kind of net sellers. And a lot of that brunt is felt on the financial names. So I think once things kind of stabilize, you'll start to see them kind of in terms of improve further in terms of returns and so on and so forth.
Atul, hi, afternoon. We're just looking at the key holdings of your large cap fund, and we should just get that up. HDFC Bank, ICICI Bank, Reliance, Bharti, Infosys, L&T, SBI, ITC, TCS, M&M, Kotak Mahindra Bank, and Maruti. That's a quick run through. But some of these, pure consumption names like Eternal, it's a part of your large and mid cap fund, but it's missing in the pure large cap fund, or a Trend or a Titan. These are absent as a part of the top holdings. Can you explain that?
Sure. So although we own some of these names as well in the portfolio, even in the large cap fund, what you see is the weights in the fund for some of these stocks are on the lower side as compared to the larger holdings like you spoke about. So many of these names, we own it in the portfolio, but they are not as large weights. Because the thought process is that basically you need to assign in terms of active weights to names where you see a significant kind of outperformance potential. And hence, the better way to look at it would be more from the perspective of active weights rather than in terms of absolute weights, because some of the larger names like HDFC and so on, like they are also pretty large in the benchmark itself. So, so that is the kind of thought process. Like, so look at it from the perspective of active weights rather than absolute weights, because they are a large part of the index itself.
Atul, hi, good to have you on the show this afternoon. So I was looking at your large and mid-cap fund, where if you look at some of the top holdings, top 5-6 holdings, you have a fair play, I mean, on the consumption side, through something like an Eternal, the new age platform companies. You also have, of course, industrials. I think there's CG Power, there's also Siemens, which is on your list. I think there's also Amber. So, I mean, a lot of plays on the manufacturing and the industrial side as well. Now, with these GST cuts happening, are you making any overall pivots in the portfolio, say more in favor of consumption, taking some money off the industrial side or not? Basically, how are you balancing the two sides of it?
Sure. So, in terms of sector-wise, if you look at it, consumer is an overweight, telecom is an overweight, industrials at the margin, I would say, is slightly tilting towards underweight. So that is the current positioning. And what we've seen even from the top-down perspective is in a lot of the government actions we've seen in the last 12 months, the bias is towards reviving consumption, either in the form of income tax cuts that we saw about a few months back, and now with the GST rate cuts and so on. So the government bias, top-down bias, is also tilting now towards consumption, and they want the results more in the near term. And if you look at it from the perspective of capex, then capex tends to play out more in the medium to long term. So the top-down tilt, even from the government perspective, is tilting towards consumption, and our portfolios are also aligning towards that theme.
Okay. Got that sense. Within consumption, since you said that that's an overweight for you, and that's a very large basket. So can you drill it down a little further? I mean, and these are not trading calls we're talking about. Someone who's getting into the fund is, you're obviously looking at it from a medium-term perspective. So what's going to be your order of preference? Auto, FMCG, consumer durables, hotels, footwear, value retailing. It's a very large universe. Absolutely. So just give us your order.
So the order is more at the top-down level in favor of discretionary over staples, because see, a lot of, in terms of rate cuts, etc., like we've seen on the taxation side, we believe that they will tend to benefit the discretionary aspect of consumption more than the staples, because staples, by and large, I don't think there is going to be any major elasticity of demand at a 5% lower price point. So the overall tilt is towards discretionary than staples. And within that, obviously, the biggest beneficiary so far, like we've seen even in the stock prices, is on the auto side. But even consumer durables would be a space which would start to revive, I would say, in the next few weeks as the festive period starts to come about. So autos and consumer discretionary in the form of durables, those remain the key, I would say, beneficiaries. Staples would, I would see, like limited elasticity of demand happening over there.
Thank you, Atul, for joining in. Great conversation as always. For the market, still up nearly about 90 points. Let's find out what the futures and options trend look like. It's also the weekly expiry day. Nigel's at the F&O desk.
Well, that's right. We're seeing the markets in a bit of a band. And in today's trading session, you have the Nifty Bank that continues to underperform. But the reason that we're higher is courtesy Infosys as well as the tech space. We need both those two batsmen to move in the same direction, and both of them find their form for the markets to go ahead and break that crucial 25,000 mark on the upside. That said, just take a look at the option space. A couple of call options. You were just highlighting that the Nifty is still up 80 to around 90 points. Now the 24,850, beg your pardon, 24,850 call and the 24,900 call. Both those two, you're getting the direction right? Because the Nifty is up. But the premium has come down because there's writing at that particular level. And the 24,900 call from the word go is seeing aggressive writing. On the downside, though, the 24,850 put as well. The premium, the last time I checked, had come down to around 10 rupees or thereabouts. But that's the one that's seeing some writing. So the lower levels as well, the bulls believe is protected. So now we're at a very, very crucial juncture. And the next 25 to around 28 minutes is going to be important to see whether or not the high and the low of the day can be protected. If we can get past the high of the day, which is closer to around the 24,900 odd mark, if we can get past that, we can have a quick fire of 40-50 points on the upside. So just keep that upside in mind. And on the downside, the 24,815 is the important mark, going by the options data, going by the levels that we've seen today. Stocks that I'm looking at, well, Tube Investments as well as Titagar. We're seeing both those two stocks up, and there is a good amount of open risk build up. So there is fresh buying on both those two names. And on Amber Enterprises, yesterday we did see that there was a good amount of shorts in the system. However, it appeared there was some pre-positioning ahead of the good news that we saw. And now we're seeing a bit of a short covering bounce that's playing out because those shorts are covering out that position and the stock has recouped all of yesterday's losses. And finally, JSPL taking a bit of a breather. The stock has had a good run, but it appears there is more unwinding of long positions that we're seeing on JSPL. No stocks going in or out of the F&O band. RBL is the one that's in the F&O band. But the last time I checked, the open interest as a percentage of MWPL is at around 89%. So it's a far cry away from that 80% that it needs to breach to come out of the F&O band. So we'll keep an eye on that. Back to you.
Okay, all right, Nigel, very, very interesting data. Thank you for joining us with that. Now to an exclusive conversation with CNBC-TV18. Finance Minister Nirmala Sitharaman outlined the government's economic roadmap, highlighting GST rationalization as a key driver of consumption without compromising fiscal discipline. Listen.
There's more money given already through the income tax cut. Right. The rates are coming down. So the citizen now has a choice to meet his aspirations and his expectations. He cannot say, look, I have the money because the income tax is reduced, but these items are beyond my affordability. Now everything has come down. I'll give you this number which is important. 99% of all the goods and services which are touched by GST are now either in 0 or in 5 or in 18. That's right.
Okay, that's the finance minister talking about the GST cuts and their implications, the impact on the economy. Let's get your view from Mr. Piyush Goyal as well. The Commerce Minister has said that the India-United relationship is the most consequential. Goyal also said that India is a patient country and believes in dialogue and diplomacy amidst the tariff standoff with the Trump administration.
We have had certain blips, like we had the sanctions post the nuclear tests in 1998. Yes. I look at this only as one more situation which will pass as there's a deeper understanding of the reality of the situation. And I'm very confident this relationship will only strengthen in the years to come. It could happen soon enough. It may take some time. Irrespective, we will continue to be friends. We will continue to be engaged with the United States. And I'm sure we will continue to have greater economic relationships, defense relationships, greater interest in a safe, fair and secure Indo-Pacific. In some sense, it's a very multi-dimensional relationship.
Okay, important statements. We'll get into a break. We've got about less than 30 minutes to go to wrap up trade. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter.
Welcome back. Well, let's get straight to the action coming in from the dealing rooms. Nimesh is with us. Nimesh, tell us what are you picking up?
And it's all about IT today, right? That's the only index which is supporting the Nifty, and that's buzzing in trade. Otherwise, it's been pretty much flat to negative. There is not much to talk about as well from a broader market perspective, barring IT names today. Even within IT, it's largely a short covering rally rather than a big, move or a cash-based buying in the IT names as well. Having said that, I understand there is a small MOC buy basket at the leading FIDs. So maybe you'll see some institutional data towards the end in terms of today's market. But otherwise, there's not much to talk about. Even in the broader markets, the index looks flat, but there is a lot of unexplained moves in a lot of cash-based stocks. You can't justify kind of moves we are seeing in many of those names. We keep talking about many of those. Like, for example, MobiKwik. it's rallied 50% from the lows, but there is no specific reason.
Yeah.
There are so many such stocks which are doing good and buzzing for the last few days, but you can't explain really as to what's going on there. So unexplained move in a lot of the mid and small cap names, but from a large institutional point of view, it's more of short covering rally in IT rather than big buying as well.
Okay, all right. Yeah, some interesting moves, and some of the stocks have been the biggest underperformers who have come back up. What about individual names? What are you picking up?
So the first stock on my list is Nykaa. That's been under pressure today. In fact, most of the platform businesses are a bit under pressure, but Nykaa stands out and is under pressure largely on fears of a large block deal coming soon. So that's the buzz there. The second stock is Tata Communications. It's out of the FNO now, and you've seen first signs of move in Tata Communications. Two reasons. One, the big selling seems to be largely over from a leading FI. And I understand in the last few days, some domestic mutual funds have been accumulating Tata Communications. The third name is Vikrant Engineering, and a recent listing has recovered a little bit from the IPO price and the lows. But again, in Vikrant, I understand some HNIs have started buying as well. And also for Vikrant Engineering, there is a strong buzz that the company is likely to bag a large order very soon. So that's the trigger there. And the last one is M&M. That's been relatively outperforming within the auto pack ever since the GST rate cut. And for M&M, it's also backed by very strong FI buying. And within that, I understand one large leading FI fund has been aggressively buying M&M. And that's the reason why it's relatively outperformed the auto basket in the last few days.
Yeah, no, absolutely. Interesting names there. By the way, Nimesh, every day yesterday, not every day, but yesterday also we spent a minute on Prime Focus. Today, again, 10%.
And again, there is a block of 1 crore shares. So again, looks like some institutional buying has happened. And we know the seller, right? There are two large funds who own 25% and they've been selling out, or at least pairing stakes. So looks like that same entity has sold again today. Even yesterday, the feedback was some large FIs have bought, and it got reported in the block data as well. So it looks like some more interest from larger institutions in Prime Focus.
Yeah, I mean, that's the thing with stocks, right? You don't, it's a name in which so many people, and you know that Nimesh was talking about the 25% holder stand, see, frustrated for years, right? Nothing happened. And then in 3 days, 30%. So that is markets for you. You can never time these things. So you've got to be in the market, as they say.
But you know, Prashant, just to add, if you look at the recent data, Prime Focus is not the only example. Look at what happened to Ola as well. You know, some larger FIs moved out, and then the stock rallied from 45 to 65 non-stop. I think similar thing happened in MobiKwik as well, right? Adia sold out 2-3%, and after that the stock has rallied 35-40%. So that's market for you.
Yeah, no, absolutely. And there would be so many people, right? I mean, who would have held on for all those times and sold out in frustration, and then see prices go up. So while we look at, of course, the gains and the wins, etc., but there's also the other aspect of it. So can't time. You got to time in, stay in that sense if you believe in some of these stories. Thank you, Nimesh, for that. So those are a bunch of names to keep an eye out on. Vikrant is a new one. So HNI buying and some order expected there. All right, Mitesh is with us with what to buy or sell today for a reverse trade tomorrow. Mitesh, take it away.
Yeah. Well, I have two long side calls. One is Adani Ports. Now the stock is just near the day's high. Very positive setup on the hourly and 2-hourly chart. So keep the stop below 1371. Look for targets of 1395. Dr. Reddy's, pharma is another sector which is slightly better after IT. So DRL is a BTST as well. Keep a stop at 1278 for targets of around 1305.
Okay. All right, Mitesh, got that. Thanks very much for all the calls and the trading advice today. We'll, of course, see you with the market again tomorrow morning. But for the time being, let's move on. And we're looking at a story from the insurance space. The Department of Financial Services is going to be meeting life and general insurance CEOs tomorrow. Yash joins in to tell us what perhaps could be on the agenda. I don't know if they're still going to talk about GST and the lack of that input tax credit or not. But Yash, what's the likely, talking point?
Well, you exactly preempted it. It is about GST and the demands, but the difference is going to be that the demands amongst the industry now have been firmed up. There are two important demands, and Department of Financial Services officials are expected to meet the CEOs of life and general insurance industry tomorrow itself to discuss these demands and understand the rationale behind the demands. As far as the meeting itself is concerned, this meeting will follow a letter or a presentation which will be sent by the life insurance industry to Department of Financial Services, Finance Ministry, as well as CBIC. And that presentation of the letter is expected to be sent today itself, after which tomorrow the meeting is scheduled between DFS senior officials and the life and general insurance CEOs. Now, what are these two important demands? The first demand is make GST changes prospective. The simple argument from the industry today is that, if you are bringing changes to GST, then why not make it on policies sold after September 22nd, which is when GST becomes applicable, the changes become applicable. The reason behind that is because the industry says that the policies which were sold before that were priced keeping in mind the input tax benefit which the industry was getting. The premium pricing was done keeping in mind that input tax credit benefit. And now suddenly with the changes, you can't reprice the policies and the industry has to take that loss on its books when it comes to that particular element. If not, just a demand on the other side of the same core demand would be that make GST changes, that is exemption on life insurance policies, prospective, that is after September 22nd. So everything that was sold before that would attract the same GST rate, that is 18%, the same ITC benefit of 18%, and exempt status would only kick in for policies sold after September 22nd. That is the first demand. The second demand is essentially commissions to be exempt from GST for new policies. Now, the government has made reinsurance exempt, but the industry is seeking the commission part of it to also be exempted from GST. Now, reinsurance and commission both together form about 80 to 85% of the total expenses. The industry believes that if commissions are made exempt from GST, then, there won't be any additional cost on the books of insurance companies, and they would very conveniently pass on the entire benefit of GST to policyholders. These are the two demands. The meeting will be very crucial between DFS senior officials and the life insurance industry CEO tomorrow.
Absolutely. Yash, thank you very much for that. So we'll keep an eye out on this one. I mean, stocks, of course, have been sideways, under pressure, because this is one area where, it's tricky because of those input credit not available on some of the some things like commissions, etc. And we've been sort of highlighting this, reporting on this as well. So that is the insurance story. IOL Chemicals is what we want to sort of quickly talk about. Stocks up, I think 30% in September so far, and if you stretch the timelines a little bit, it's up more. Is something changing? What's happening? Ekta is here with details. Ekta.
Well, IOL Chemicals, seems to have picked up a lot of pace this year. It's up around 41% this year. It's buzzing today, and it was yesterday as well. Now, as of Q1, the company said that the overall demand environment remains stable, but pricing has been subdued for them. Paracetamol, which is one of their key products, that pricing was low, but demand is better than the pre-COVID levels. They are seeing good demand in non-ibuprofen APIs as well, such as metformin, paracetamol, pantoprazole. So they are seeing some amount of pickup, and in fact, they aim to diversify their API portfolio to 50-50 split between ibuprofen as well as non-ibuprofen. Now, paracetamol plant has commenced exports to Europe as well as other regulated markets. So that should probably also be a trigger for IOL Chemicals going forward.
Ekta, thank you very much for that. There's 11 minutes to go for market closing, and things are holding pretty steady. Let's just revisit Infosys, right? But not from a stock perspective in that sense, but from a different angle. This is, of course, taxation, buyback taxation. There were changes which were made in the, in the budget, and many out there in the markets are not happy in terms of how this would work. So let's break this down for you. Rima, from the beginning, what are we talking about?
Well, firstly, the new buyback tax is effective 1st of October 2024. The buyback amount that you receive, the total amount, will be now treated as dividend. Let's take a simple example. Now you have 100 shares of a company, and you're going to tender in the buyback at 2,000 rupees, which means the total amount that you make is 2 lakh. 100 into 2,000. Now, this 2 lakh will be treated as the taxable income. Of that 10%, 20,000 will be paid by the company, TDS, and the balance 40,000 will be paid by you. Okay, so that seems very high because I'm assuming a 30% tax rate, assuming the highest tax rate for a person. right? But the difference is your cost of purchase. Now, suppose I've purchased those 100 shares at 1,000 rupees, which means my cost of purchase is 1 lakh. That will be treated as a capital loss, which means it can be set off against other capital gains. And if you don't do that this year, I think there is a period of about 7 years over which you can treat it as an offset for capital gain. So basically, it's a lot more complicated. Yeah, it's a lot more complicated.
It should have been 2 lakh minus 1 lakh.
Yeah, which is what you do in your regular capital gains, and you pay LTCG on it. But now, there's TDS, then you have to pay at your highest tax rate. And then, part of it is paid by the company, and then there is a set-off. So you need to have other shares that you're selling on which you're making capital gains to make, the most of it. So we just thought we'd put that out there. So just check with your CA. And this will be the first test. This is the first big buyback which has been announced, which will test, the buyback rules.
Absolutely, and it'll depend individual to individual, depending on the gains they've made, the set-off that they can avail of, etc., etc. But there is a time period; it doesn't have to be done immediately. But as Reema pointed out, it is more complicated. Lots of people have made, by the way, representations to the government, to the regulator, etc. And hopefully, perhaps this is going to be under consideration as well. Okay, there is a news flash at the bottom of the screen. Big relief from the Consumer Affairs Department to ensure smooth passage of GST cuts from the 22nd of September. The relief itself, what is it? We'll try and put that up in just a bit from now. But that's the flash which is coming up on our screens at this point in time. Let me just see if we have it and if you're able to go to it straight up and if this is significant. Okay, I think we'll just wait for it. Let's just address the other story, right? Sona Comstar, of course, there is the succession issue, after Mr. Kapoor passed away. Ashmit is standing by with the latest in terms of what's going on. Ashmit, take it away.
Well, there's a fresh legal issue that's at play as far as the Delhi High Court is concerned. Bear in mind that Sanjay Kapoor was married to Bollywood actor Karisma Kapoor. The children between Karisma Kapoor and Sanjay Kapoor, we understand, two of them, one age 20, the other 15, they've moved to Delhi High Court. In this petition, there are two important takeaways. Number one, they're claiming their status as Class 1 of Sanjay Kapoor, and to that end, they're seeking entitlements to the assets of Sanjay Kapoor, going on to say that each of the two children are entitled to 1/5 of the personal assets and effects of Sanjay Kapoor. That's part one of the story. The other part is that they are challenging the will that is being claimed by Priya Kapoor, the widow left behind by Sanjay Kapoor. They're saying that this will is forged, that it has been it's been forged, that there's very suspicious conduct of Priya Kapoor, that she's refusing to share the details of, that there is an obstinate refusal by Priya Kapoor to share the details of the will, and that demonstrates that there is a suspiciousness with respect to the will itself, and therefore they're rejecting, the children are rejecting this will which went against them, that refused them the entitlement. And finally, they're also seeking an interim prayer of having an injunction, the Delhi High Court restraining Priya Kapoor, or for that matter Sanjay Kapoor's mother Rani Kapoor, from transferring or selling any of these assets. The lawyers, we understand, are pushing for listing of this case tomorrow before the Delhi High Court.
Okay, Ashmit, thank you very much for that. I mean, so that's a fresh angle which we'll have to keep our eyes on, and we'll continue to follow that story coming through. What we're going to do is take a quick commercial break here. We'll come back. Okay, so Consumer Affairs Department permits companies to continue with old MRP labeling and packaging till the 31st of December. Companies will have to publish new pricing via ads and notices to dealers and distributors. And I'm assuming this is largely to take care of inventory-related issues on which there is GST marked up and to avoid complications therein. So that is what's coming through. So all the way till the 31st of December, the ministry is allowed for the older MRPs, etc., to be on. Okay, so publish new pricing. We'll get you more in this, and maybe a tax expert as well in terms of how this would work. I don't know if you have the time to do that on this show, but we will surely pick up on this. But this does seem to be aimed at that. We take a break. We're back 5 minutes to market close.
Welcome back. I think we have Jay Bal of Cash the Kiosk who's joining in. Jay, good afternoon. Good to see you win. Two indices, one on the Nifty, you were quite positive. Do you believe that uptrend is intact? Point number one. And the Nifty IT index, the big underperformer, suddenly finding its form. It's good for more.
Hi, Nigel. The fact that Nifty is trying to hold up 24,357, that is good. But it needs to quickly take out 25,153 because it's stuck in this range, and that's not an encouraging sign if markets stay much longer. So it needs to take out the range very quickly. Nifty IT index has tested 34,200 for the second time and bouncing from there. That's a positive sign. And the fact that markets are trying to rotate into a different sector besides the auto, that's a good sign. So, it might be good for more as long as 34,200 holds. The objective, it's a relief rally. It's not a change of trend for me. It's possibly trying to scale somewhere close to 40,000 plus, possibly closer to 43,000 on the Nifty IT index.
Well, that's a good 15% away from current levels. So you won't rule that out?
Yeah, that's right. It's a reasonable possibility. And the only chink in the armor for the Nifty IT index is TCS. That's not, in my opinion, completed a perfect low. But Infosys, HCL Tech and Wipro, they are all doing quite well. And the fact that Infosys is up 5%, which has more weight to the Nifty IT index, that might be telling us that it's good for more.
All right, quickly, two bullish calls you have. Bharat Forge and Prestige Estates. You believe they can scale higher?
That's right. Bharat Forge is coming off yesterday's bounce, and that's a good sign. It offers an opportunity to get in for people, and an objective of 1380 with a stop of about 1,080. Prestige Estates is looking very interesting in the short term and the medium term. As the lows it registered last week is probably a perfect correction. I don't see it dropping much below 1,400, and if it registered a low last week, it's probably heading past 2,100 in a few weeks' time frame.
Yeah. No, absolutely. Jay, just a quick word on, by the way, why don't you talk to us a little bit about the structure for IT services, if you will, and do you think there is more here?
Yeah, if you look at select stocks like Intellect Design Arena, or if you look at something like Quick Heal Technologies, or something like Apple, they're all looking quite bullish. Apple is quite late; it's already at fresh record highs. But it's been bullish for quite some weeks. And IT services in particular are particularly the second-line ITs. They're actually looking far better than the frontline ITs. So it's still good to go for more there. So be very selective there. Choose your picks very wisely there.
Your trades, Jay?
Yeah, and I would take a punt on Quick Heal Technologies. That's quite interesting. Intellect Design, I'm a bit hesitant, but if you're already holding, hold with a trailing stop loss. But Quick Heal is an ideal setup at current levels.
Jay, thank you for joining in. We'll connect with you after the break. The bell has gone and the Nifty has shut just shy of 24,900, but still managed a century. 103 points up on the Nifty. The sensex up 330 points, and it was a tech-led rally all the way. The Nifty Tech Index ending with a gain of more than about 2.5%, and right on top is Infosys, up 5% ahead of the buyback announcement 2 days later. Wipro, Tech Mahindra, HCL Tech, TCS, Infosys buyback announcements infuse life in the rest of the sector. Other gainers include Dr. Reddy's, Adani Ports, SBI Life, Eicher Motors.
Absolutely. And, I just want to highlight a few other names, right, before we wrap up here. And lots of individual moves, I think, which we can maybe talk about. So let me just do that for our viewers. On the upside, maybe start with Precision Camshaft. Biggest volume-led gainer today, 14%. Bluestone was up 12%. Gujarat Fluorochem, 8% pop. Action Construction Equipment came through with a 6% gain. Railtel was up 6%. There was Affle India, which was up 7%. Sula was up 7%. Aether Energy, 10% gain. Prime Focus, of course, we've been highlighting for 3 days now. Ujjivan Small Finance Bank, we played sound bites yesterday after the management's sort of, guidance going forward. And, two of the names which Jay put out, Quick Heal, 13% higher. And of course, the other one was Intellect, which I think did pretty well today as well. ITD Cementation, another one, which ends with about a 6.5% gain. So lots of moves in the broader market. Almost exactly 1:1 advances to decline ratio on the NSE 500 is what we had. It's a wrap on this edition of Closing Bell. Jay Bala is with us, and he'll come up along with, of course, our other anchors to take you through Markets Forward, which follows shortly. Stay with us.